Good evening, traders. It's Krishna Joshi here with 7 Points Capital, and I'm going to bring you today's trader takeaways. Exciting Monday. Not a whole lot of earnings on Monday morning. So today was just a few names, but other than like earnings plays, there were quite a few M&A news going on, and some of it was pretty active. And then we had a couple of biotech names, so the watch list for the morning was pretty big. Had to come down to a few selected handful names because that's what I've been trying to do. Friday ended up being a day where I started over trading, had a couple of big losers which went out of size, and had a good weekend to think about it. And the idea was to come back strong, stay focused, and make sure that you keep taking one trade at a time. You keep focusing on the A plus setups, and just do single home runs as long as the opportunity is there. Just try to stay focused with it. So that being said, let's quickly jump on to SPY. That's how we usually start off. Spies, they opened a little bit on the higher side pre-market, so they closed weak on Friday, and they opened like decent up, probably like a 1/4% in the morning, which was as expected. The market doesn't really have a catalyst to sell off, so it just opens pretty much flat or up a little bit every day. So as expected, the spies opened up, starts selling off. But let me quickly show you a few levels that I was looking at. So for me, I had a few long setups right around on the 12th, 13th, 14th, with a good continuation in SPY for like about 5 points. And again, when it comes down to support levels, I'm looking at 260, 250, 263.50 as good support areas. So if spies come into this range, it's still not sell off for me. It's more like it's just pulling back, might be sideways and chop for a little bit. But in the overall, in the long term, it feels like the markets are holding strong. Every pullback kind of gets bought up again. The two sell off, like every day they open up strong and then sells off pretty hard. So nothing unusual. Similar story in SPY today. Kind of sells off in the morning, and then had a good push right up until like 2 o'clock. We saw a good, decent, pretty sell-off. I just stepped away for coffee for a little bit. Was trying to stay away from markets, from over trading like Friday. And when I come back, the markets are down pretty big. And then I started looking at opportunities that were coming up and taking one trade at a time. So I'll get into individual names pretty quickly. FTK, oil and gas equipment stock. Let me show you the daily. It's pretty weak. The daily is not good. If you've seen some of the other oil names which have been rallying in the past, like Seadrill, Rig, and Neighbors, and then a lot of the other small oil names, this one hasn't really rallied or made like new highs. So it was still around here, and then they came up with guidance today morning, which was pretty bad. EBITDA was down, revenues were down. That's what they expect for this coming quarter. So the stock was beaten down, beaten in fact below multi-year lows, and which is why it gave amazing setup right in the morning. Let me jump on to, I'll go down to the 1 minute right around here. So this was a great setup where it was consolidating. It sold off in the morning and then consolidating at that 450 level. So we look at round numbers, we look at like the whole numbers, $4, $5, but even the halves. So 450 really significant in such a stock where it goes down, can't really pull back. So if you look at the move from right around like $5 to 450, that's a good 10% sell off, and the pullback really small. So best risk reward setup, that's what I'm usually looking at. The secondary moves around 945, and this worked out fantastically well, where you were risking a little above 453, and the good continuation covered into the low 420s, I think, for the first half, like right around here, and then short and added back the same position, covered right around here. Again, the idea was not to look at the long setup. In fact, when it goes up, look at more spots to get in. So this was again a good spot for me where I got involved, joining the trend. on the pullback, and all the way it just sold off. I was not on the short side below $4. I was still in it in this trade. On the way up, I got out like close to 398, 399. So all in all, a good trade given how much we were risking initially on the trade. And the position sizing kind of kept changing as well on the way down. So what started off as a few thousand share position on the way down, risking a few cents, ended up being like a good winner. And then on the secondary moves, third moves, we are looking at much bigger size, because you know how strong the seller is. You're looking at multi-year lows and a very weak catalyst on the day. So if you're looking at a big fundamental change in a company, that's a big A plus setup where the stock wants to continue on the downside, and every opportunity, every push up was a good opportunity to get short. I'm not saying really like start stepping in front of it, but once it settles down again, you look at good spots to get in. So FTK ended up being a really good trade. Another one of the biotechs that was really active was AKRX. If you look at the daily, it's a terrible looking chart on the daily. That is because it was a takeout. Let me show you a 3-day chart so that I can take you back to 2014. And so yeah, look at this stock. The company was doing fine, a few good drugs in the pipeline, and then the stock was just down and sideways from $55 to 15 up until this, where it was a takeout by another big pharma company. And what happened with that one was the company which was taking them out felt like there is something wrong with the data, and there was like discrepancy in the numbers that came out. So they don't want to take out the stock anymore, which is why it sold off right around here, because of the data that the stock has. And right from the acquisition price around $34, it's down to like lower than where it actually started off on the buyout. So the stock was weak, and in fact it was gapping down about 35%, and it did not make new lows on the day. Like it held the 1250s, kind of rallied up. I was looking at getting in on the slight pullback, looking to join the trend which was on the upside. There's a lot of buying pressure. All of these big candles were like massive size. If you were stuck short, you'd be out of money 20-30 cents easy. So this ended up being a good long setup around the 1320s, added 1325s on the way up, as this had held on multiple occasions here. And on the way up, this was just easy. It was holding like 1375s held, I think, right around here, and 14 was a little bit of resistance, goes down, it comes right back up. So I was trading around the core on this particular position, did not go short either of this, because again I was looking at opportunities to go long. I did go long around 1401, which was here, ended up being a scratch trade because a huge offer came in at 1401 trying to push it down. In fact, 6-7,000 on the offer on a couple of exchanges, and just pushed the stock down. So every time it went sideways, the offer was there, but I'd be violating my rule, going against the trend. And I had a good setup on the long side, especially all of these prices were trading much higher than my initial long position. So I did not really see it as a sell opportunity, and I kind of left it alone for the rest of the day. The second segment, which is something I should have done better, was SKX, which is day 2 on earnings. It had terrible set of earnings. They're not really having high margins, revenue growth slowing down, and I saw a tight setup. I saw a couple of higher lows, and I bought these 31s. Let me see if I can take it in. So yes, I'm buying these 31s, risking below 25, and then I had a good 10-12 cents on this. Same setup again. It comes down, buy the 31s, it goes up, and then really pretty much you are able to take the highs on this one. And what I did wrong was I did not get long here. Definitely had something to do with how I was trading. My trading was slowing down. I wasn't seeing a lot of setups, so I was forcing myself to trade less. SPYs were probably going down around the same time, and I did not take this trade, which ended up being a big miss on the trade. So even though I scalped two good long setups, and it came back to the same exact spot. So there was no reason why I shouldn't have got long there. It was more like a no-brainer. If it held on two occasions, if you're only risking tight risk reward setups, I think this was definitely a good setup for me to get long. Clearly knew where the support was. I knew what the buyer was acting. He would fake try to hit the bid at 29.30 and then just wash it up. So this is something which goes down, reminder for me. Just like I wasn't shorting AKRX because it was still higher than my initial long position. Similarly, there's no reason to go short. But again, I should have just bought it like a no-brainer for me. And the last segment is something that I should have done better, was HAS. I think I switched it up. So the one that I made a mistake, I should have, the bad trade would be is HAS, because SKX was something I should have done better in. So the bad trade was in HAS because I was short right around here, and I kind of saw that it was trading in a range, a higher, more like a bull flag on a higher time frame. Earnings on this, look at this, so good push up right in the morning because of Toys R Us bankruptcy, and it gave a couple of good setups on the long side. So instead of relying on the support area around the 84 level and then 84.25 and 84.50, so it kind of kept holding it higher. So instead of relying on leaning on these levels, I shorted, and I thought it was ready for a rollover. Not exactly a perfect or a clean head and shoulders pattern there, but I saw like a good channel and I felt like this could. So if 84.25 wants to break, wants to go down, a retest and makes a lower high at this spot. So this is where I was trying to get short, but instead of that, the idea should have been to stay on the long side, because the Toys R Us was a negative news, but it affects MAT equally, and MAT was strong all day. So I was trading the two hand in hand because same sector, the top two companies in this area, and then I should have looked at it this way. So I drew this trend lines in the morning. I was looking at the tight channel and ended up getting stuck short on this one. Not a losing trade, but again missing out on an opportunity on a slow day like this where not a whole lot is going on. I think it should have been a long position. Instead I was stuck on the opposite side of it. So it goes down again as if I'm trading multiple positions in the direction of spies, in the direction of the trend, then this is again something that I should have been on the long side. At least not, if not long, I shouldn't have been stuck short on this one. Even though I don't lose a lot on this one, the idea was again missed opportunity. Thanks again for watching, guys. We covered a few stocks. Let me know if you have any questions. If you want me to cover any more stocks, I do end up trading quite a lot of symbols, small positions here and there, and a lot of other ones. But if there's setups that you like, if there's anything in particular that you would want us to go over, we would love to do that. Thanks for the feedback. Appreciate. Share it with your friends. Like, comment, subscribe, and keep watching the trader takeaways from 7 points. And this is Krishna Joshi here with you guys. Thank you.